Ladies and gentlemen, buckle up, because your wallets are about to take a one-way trip to the shredder. Welcome to Boss Economics World, where we rip the mask off the economic clown show and expose the government circus of mismanagement. Today, we're diving headfirst into the latest inflation numbers, Trump's tariff tantrums, and the Federal Reserve's favorite pastime, playing ostrich while the economy burns. Spoiler alert, it's not just your grocery bill that's ballooning, it's the government's incompetence too. Let's break this down, point by point, and show you how the suits in Washington are turning your paycheck into pocket lint. Oh, folks, the Bureau of Labor Statistics, BLS, just dropped its latest Consumer Price Index, CPI, report, and the headlines are screaming, inflation slowed in February. Cue the confetti, right? Wrong. Let's dig into the numbers and peel back the layers of this economic onion. Spoiler, it's gonna make you cry. Point 1, the headline hype, 0.2% CPI increase sounds cute, but it's a Trojan horse. The CPI rose by a measly 0.2% in February, down from January's scorching 0.5%. The core CPI, which strips out food and energy, also clocked in at 0.2%. Sounds like progress, right? Not so fast. Annualized at 0.2% monthly increase, and you're still looking at a 2.4% inflation rate, above the Federal Reserve's sacred 2% target. And let's not forget, this slowdown comes after months of inflation stalling out, with the year-over-year CPI still hovering at 3.1% as of February 2023, according to the BLS. So, while the media pats the government on the back for taming inflation, the reality is, prices are still rising faster than your barista can misspell your name on a $7 latte. But here's the kicker, nearly half of February's CPI increase was driven by shelter costs. That's right, folks, housing is eating your paycheck alive. According to Zillow, the median rent in the U.S. hit $1,987 in February 2023, up 6.7% year-over-year, while home prices remain stubbornly high, with the Case-Shiller Home Price Index showing a 5.1% annual increase. So, while the government brags about slowing inflation, try telling that to the millions of Americans who can't afford a roof over their heads. This isn't progress, it's a slow-motion train wreck. Point 2, Trump's tariff tantrum, a masterclass in economic self-sabotage. Now, let's talk about the elephant in the room, or should I say, the tariff-happy former president who thinks a little disturbance in prices is no big deal. Donald Trump's latest tariff proposals, which include slapping 10-20% tariffs on all imports and up to 60% on Chinese goods, are a Molotov cocktail thrown into an already smoldering economy. Trump told Congress last week that higher prices are just a minor inconvenience, easy for him to say when he's not the one choosing between groceries and heat. Let's break down the math, shall we? The Peterson Institute for International Economics estimates that Trump's tariffs would raise consumer prices by an additional 1.8% annually, costing the average American household $1,500 per year. And who gets hit hardest? Low and middle-income families, who spend a larger share of their income on tariff-sensitive goods like food, clothing, and electronics. According to the National Retail Federation, a 20% tariff on apparel imports could increase clothing costs by 18%, while the Consumer Technology Association warns that tariffs on electronics could jack up smartphone prices by $100 per device. So, while Trump plays tough guy on trade, it's your bank account that's getting body slammed. And don't think this is just theoretical. We've seen this movie before. Remember Trump's 2018 tariffs on steel and aluminum? A Federal Reserve study found that those tariffs cost American consumers and businesses $40 billion annually while killing 142,000 jobs due to higher input costs. But hey, who needs jobs when you've got America First bumper stickers, right? Point 3, stock market meltdown, when uncertainty meets incompetence. Now, let's zoom out to the surface-level chaos, the stock market. Trump's tariff threats have sent Wall Street into a tailspin, with the Dow plunging 1,000 points in a single day last week, its worst drop since March 2020, according to Bloomberg. Why? Because uncertainty is the market's kryptonite, and Trump's trade policy is a masterclass in chaos. Investors hate not knowing whether their supply chains will be gutted or their profit margins torched by higher costs. And with recession fears reignited, the VIX, the market's fear gauge, spiked to its highest level since October 2022, hitting 22.3, per Yahoo Finance. But here's the real punchline, Trump had the audacity to downplay the market meltdown, saying, it's just a blip. Oh, really? Tell that to the 401k holders watching their retirement savings evaporate faster than a puddle in Death Valley. And while we're at it, let's not forget the broader economic context. The Conference Board's leading economic index, a key recession predictor, has been declining for 22 consecutive months as of February 2023, signaling a 60% chance of a recession within the next year, per their latest report. So, while Trump shrugs off the chaos, the rest of us are left wondering if we're one tariff tantrum away from economic Armageddon. Point 4, the Federal Reserve's ostrich impression, wait and see while Rome burns. And now, let's turn our attention to the Federal Reserve, the supposed guardians of economic stability, who are currently perfecting their wait-and-see yoga pose. With inflation still above target, recession fears mounting, and Trump's tariffs threatening to pour gasoline on the fire, what's the Fed's big plan? Nada. Zip. Zilch. Fed Chair Jerome Powell has signaled that rates will likely stay steady at next week's meeting, with the federal funds rate parked at a 22-year high of 5.25% 5.5%, according to the Fed's latest minutes. But here's the dirty little secret, the Fed is stuck between a rock and a hard place, and it's their own fault. By keeping rates too low for too long during the post-COVID recovery, remember, rates were near zero until March 2022, the Fed pumped trillions into the economy, fueling asset bubbles and inflation. Now, they're terrified of cutting rates too soon and reigniting inflation, but they're also terrified of keeping rates too high and tipping the economy into a recession. The result? Paralysis. And while the Fed fiddles, the economy burns. Oh, and let's not forget the growing chorus of economists calling for a rate cut sooner rather than later. According to a Bloomberg survey of 67 economists in February 2023, 45% now expect the Fed to cut rates by June, up from 30% a month ago. Why? Because the Fed's tight policy is already choking growth. The latest GDP Now estimate from the Atlanta Fed shows Q1 2023 growth at a measly 2.1%, down from 3.3% in Q4 2022. And with consumer debt hitting a record $17.5 trillion in Q4 2022, per the New York Fed, Americans are tapped out. So, while the Fed waits and sees, the rest of us are waiting for the other shoe to drop. Folks, if you're not furious yet, you should be. This whole mess, the inflation spike, the tariff chaos, the market meltdown, the Fed's paralysis, is a textbook case of government mismanagement. Let's connect the dots. First, the Biden administration's $1.9 trillion American Rescue Plan in 2021, combined with the Fed's easy money policies, flooded the economy with cash, supercharging demand while supply chains were still in tatters. Result? Inflation. Then, Trump comes along with his tariff sledgehammer, threatening to jack up prices even more, while the Fed sits on its hands, too scared to act decisively. And who pays the price? You, me, and every hardworking American trying to make ends meet. But here's the real tragedy. This isn't just about numbers on a spreadsheet. It's about real people. According to a recent Bankrate survey, 56% of Americans say they can't cover a $1,000 emergency expense, up from 44% in 2020. Meanwhile, food insecurity is spiking, with Feeding America reporting that 44 million Americans, 1 in 7, struggled to afford food in 2022, a 30% increase from pre-COVID levels. And with Trump's tariffs poised to make everything from groceries to winter coats more expensive, the pain is only going to get worse. So, there you have it, folks, the government's economic clown show in all its glory. Inflation still eating your paycheck, Trump's tariffs are about to make your shopping cart a luxury item, the stock market's on a roller coaster to nowhere, and the Fed's too busy navel-gazing to do anything about it. And what's the solution from Washington? More finger-pointing, more posturing, and more excuses. Well, I say enough is enough. It's time for us, the American people, to demand accountability. Stop letting these suits in DC treat your wallet like their personal piggy bank. Share this video, hit that like button, and let's send a message loud and clear, we're mad as hell, and we're not gonna take it anymore. Until next time, this is Boss Economics World, keeping it real, keeping it raw, and keeping the government's feet to the fire.